play. All right. All right, guys. Good afternoon. So today we have Miss Lynn Gaston with us and Barry Horvath from the Mortgage Firm in Trinity. And I thought it was super important to do a Zoom just because there's so much going on in the mortgage industry right now and real estate in general. And I know that I have questions as a real estate agent, so that means that the consumer probably has questions. So we're just going to kind of talk a little bit about what's going on. I've got questions for them, and I'm going to actually ask them to tell us a little bit about themselves so we know who they are, how long they've been in the business, so that we know we're talking to the experts, because we are talking to the experts today. So take it away.
Lynn, you want me to go first? Hi,
no,
Amanda. Thanks for having us on. So we can walk on each other on this, right?
Yeah, totally.
Thanks for having us. So Lynn and I are both with the Mortgage Firm Trinity. I can't speak for her because I have 22 years of experience in the industry, but Lynn probably has a little bit more. I won't share with you how much more because she started when she was 3. So let's be clear about that right up front. So. But I'll let Lynn tell you that.
My anniversary. I'm coming up on my anniversary, actually. May 5th, I started in the mortgage business.
Wow.
100 years ago.
100 years. Okay. So I told you they were experts.
Yes. Long time.
But we're kind of in a uncharted territory right now with the virus going on, and it's affecting all of us, and it's a trickle down effect per se. Right now in the industry. I mean, right now, the biggest thing is, the good news is for all of our real estate professionals out there is we are closing and funding loans. People are buying real estate. People are refinancing houses because rates are attractive in some situations. And Lynn will tell you right now, on the rates market, that's a whole nother ball game, because if you don't like the rate, just wait a minute, because it'll probably change on you.
Yes.
Yep.
Typically, interest rates change, once a day, sometimes in a volatile market twice a day. In the last 2 weeks, they've been changing probably 4 and 5 times a day.
Wow.
Yeah.
Okay. So let's start off then with talking about what is actually currently going on in the mortgage industry, because it is changing sometimes, like you said, on an hourly basis. And I don't think people realize how quickly these things change. So let's talk about that.
So I'll give you, when I speak for us, I'm not just talking about the Mortgage Firm Trinity. I'm talking nationwide, because we're a direct seller. And, I've told agents a couple of weeks ago this was coming down, and they're like, no, my lender's not going to be that way. I'm like, okay, and then surprise, they learn that it's different. So right now on a refinance, a lot of lenders are not even able to lock a loan. Right now, what we're doing is we actually have to get underwriter approval before we can lock on a refinance. And I know that seems crazy, but not to be able to tell anybody, here's your exact rate. But you know what? We submit a file, we can sit on it. And if the rate comes in, we lock it, once we have that approval. If it doesn't, then so be it. I mean, Lynn will tell you, we had people in the low 3s. And then later that afternoon, they'd call us back, say, yeah, I want to lock. And they're in the, they're in the low mid 4s on the same exact file with the same credit score. So it's a little crazy right now.
Right. Okay. So the rates are crazy. They're all over the place. We know that. I know you guys don't have a crystal ball. Nobody does. But
Lynn does.
Lynn, yes, we know. She's like the magic worker. We know that.
We haven't.
What
we
is
do
she,
have
what
that
do you
8 ball.
Yeah. What do you guys see coming down the pipe? I mean, what is this going to look like for us in, 30, 60, 90 days?
Well, needless to say, we keep our eye on the market. I have 2 screens and I have the market up on one of the screens all the time. So we're keeping our eye on the market. However, and we're reading everything that our secondary marketing department is distributing to us to try and keep on top of what it is. So So that, interest rates, mortgage interest rates, one of the biggest things everybody said, oh my gosh, the interest rates are going to zero. That wasn't the case. That was the federal funds rate, which is totally different from mortgage rates. So I do just want to clarify that with people. As far as mortgage rates go, mortgage rates typically will follow the bond market, the 30-year bond market. So just to give just a real short little synopsis on that. So the bond market is normally what drives mortgage interest rates. The better the bond market does, the lower the mortgage rates do. So that's a good thing. What happens, and this is just in typical markets, which is not where we are today, but typical markets, if the stock market starts doing poorly, people will pull their money out of the stock market and invest it in the bond market, which makes bonds do better. So normally when we have an adverse stock market, that's great for mortgage rates. Unfortunately, I say that just to kind of give you some background. That's not what's going on right now. The markets are not, it used to be about 95% of the time you can count on that. Bond market's doing good, mortgage rates are going down. Now, I was just reading a distribution this morning from our IT people or our secondary marketing people, and they said, don't even count on that anymore. It's like 50% at best, following the bond market right now. It's just kind of all over the places. So the investors are just afraid, the investors who buy mortgage-backed securities, they're just getting very nervous right now. Some of the things that are changing because of that, they definitely don't want any of the what they feel might be riskier loans, lower performing loans or something, maybe lower credit scores or something. So a lot of changes are happening. Pretty much every day we get updates at 9 and 3 every single day from our corporate on new underwriting guidelines and things like that that are coming down from the top, from Fannie Mae, Federal National Mortgage Association, Freddie Mac, FHA. So changes are coming, and it's every single day, sometimes twice a day.
And so let's piggyback off that. Barry and I were talking about this a little bit earlier before we started recording about buyers who are considered non-essential. What is happening to their loans that have already been pre-approved? They think they're moving into that house. What's just happened with that?
So I'll elaborate on that for you, Amanda. That's a great question, and it's a great point. And I kind of felt like it was coming. And again, it's not us, it's industry-wide. If you are a non-essential employee of a company, even though you may be working and your business is considered non-essential, you cannot get funding right now. So that's really a big deal because, we got 20% unemployment right now, but how many people are actually still working in a non-essential business that are still getting paid? They cannot get a loan right now.
Yeah.
So that's just part of the volatility of the market. And the good news is, though, the people in essential business still have the opportunity. And this is short term,
right,
in my mind. This will pass, but right now that's reality. So if you have a non-essential borrower in your pipeline right now, there's jeopardy they may not close. And I think the other thing we talked about is I'm telling all our title partners out there and realtors, people want to close in the morning. We're not scheduling anything before 11 o'clock right now for a closing because, again, not us, industry-wide, verification of employment is required, a re-verification the day of closing or funding. So that can take time right now because you got people working from home, you got skeleton crews on these companies. So we're trying to reach somebody at home to verify they're still employed, and it has to be done that day. So don't go scheduling something for the morning right now thinking you're going to get funding. Do it in the afternoon. Do yourself a favor. Make yourself look good because you're going to just have your buyers and or sellers sitting waiting on that funding that's not going to come while all that's going on behind the scenes.
That's such a good point. So title companies, and I have lots of them on here, listen up to that and share it with your realtors so that you're not having clients sitting in the waiting room getting perturbed waiting on funding. So as far as the non-essential workers not being able to get loans, is that across the board? Is that FHA, VA, and conventional buyers across the board? Or is it just the maybe riskier loan buyers? Dylan, we lost your face. There you go. Okay.
Sorry,
It's-
I had a call come in.
Welcome to the new way we do
I
things.
know,
Right.
I'm on the phone.
We're
Hey,
all
I'm
learning.
I'm sitting here
So
with my friends on the kitchen counters, so I
Yeah,
got
we
company if
noticed.
you guys disappear.
So let me touch on that a little bit with the essentials, because that's something that kind of scared me too, honestly, when that one just came down yesterday. And yes, in answer to your question, it's across the board. So we had a meeting about that this morning, our head of underwriting and risk management, and some of the stuff. So they're going to try and do what they can to restructure loans, save loans, things like that, because it's effective immediately. So it doesn't make a difference if your file's already approved. It doesn't even make a difference if your file is clear to close. If the file's not done yet, these things are, could go into, they could go into place immediately. But we're really trying to restructure things. Now, fortunately, I don't think that anybody that we have in our pipeline right now is affected, but I know that a couple of the, our offices are over there in the Orlando area. For example, she gave an example of Disney, people working at Disney. Now, immediately everyone says, oh my gosh, all those people who are now unemployed, they're getting paid. Does that make a difference? Not everybody is considered non-essential over at Disney. For example, your security guards, you try and walk in there, they're going to be all over you. So they are essential. The people who take care of Disney's grounds, they are essential because Disney, let's face it, that's their face, right? So there's, I'm sure every lender out there is going to be trying to stretch that essential employment so that we can try and get everyone closed that we can. We do have a list that they sent us. It's a link. It is not all encompassing, but it definitely gives us some kind of a guideline, and I'd be happy to share that with you, at least something that we can kind of go off of. So that we know. But there's a lot more essential people than you think. And this, and the reason why this is becoming real important, more important than ever right now, is because while we were getting ready to start this call, actually, I don't know if you heard or not, but the governor announced that the state of Florida is now effective, I think it's midnight tomorrow.
Right, Thursday.
Yeah, we're
on lockdown.
To stay at home. Yep.
Yeah. Okay, so as far as there's all these grants and these SBA relief loans and things like that that have been being talked about a lot in the last just few days. I can't even tell you how many emails I've gotten because I'm an independent contractor about these loans. What should a buyer, let's just say it's me, be doing or preparing for moving forward if I know that I want to buy a house in the next 60, 90 days and I take one of these grants or loans because they're being told or being portrayed that they are going to be forgiven, that they're not going to be owed. So is that considered a debt? Have we even got to that point yet? Do we even know what that looks like yet?
I'm going to say in my mind, we have not gotten to that point. The ones I have looked at, Amanda, do not have a personal guarantee attached. It's more for the company per se. So in the lending world, we don't look at your business debt. And if there's no personal guarantee attached, so there's really going to be no harm, at this time, in my mind, that'll affect the borrower if they do apply for those grants. I don't think it's going to count into their debt ratio and affect their ability to buy a home in the future.
Okay, that's so important. I mean, just because of the industry that we're in and the people that we run with, we're all independent contractors. So those type of things, I'm always thinking about, okay, great. Well, they're going to give us free money, $2 trillion of free money, but am I going to owe that to somebody? And what's that going to look like for me down the road? So should I even do that,
Yeah, great question though. At this time, I don't see any harm. That doesn't mean it won't change and they won't start adding, personal guarantees to these, but the ones I have viewed thus far, there are none, and a bunch are rolling out. But I think it's a great opportunity. We're all kind of in survival mode right now, I think, to get through this. But I think on the other side of this, we're all going to be better. We're all going to be stronger. The housing market will continue to flourish in this area. As it always has. We have such a great, desirable place to live here. And, you know, real
Right.
estate is real estate. As you know, we drive the market. Let's face it. We hold
Yep.
the economy together. We are essential to what we do.
And I feel like that's why this conversation that we're having is so important for people to hear, because I know that there's this thing out there where they're like, well, realtors they're not essential. I mean, why are they essential? And mortgage brokers, why, you know, well, because real estate and mortgage drives our economy. That's why we're essential. So, and people are always going to buy and sell homes. I got into real estate in 2008. So the worst time to get into real estate, and everyone looks,
way to go.
what are you doing? You know? But look, I'm here 12 years later and people still bought and sold real estate. We just have to learn how to do it differently. And back then it was the basics. It was door knocking. It was this and that, in which we can't really do that right now. Now it's all going to be virtual. So that's the reason why we're doing these Zoom calls and doing these online virtual trainings. I'm with an amazing company that we've been for 10 years, been doing nothing but virtual online training. It's online brokerage. EXP Realty is an online brokerage. That's all we do. So
I love your format, the way you all do business. I think it's pretty amazing. EXP, I've sat through your, you know, your seminars and so forth. I think it's great. What a concept for people in real estate.
It really is. And just to give them a little bit of another plug, we have a program called Express Offers. I don't know if you guys have heard of it, and we probably should chat about it at a different time. But Express Offers is, you know, you had the Open Door and you had the Zillow instant offer programs that were going on. Well, EXP decided to step it up. So now we have what's called Express Offers. We have institutional buyers that are in these buy boxes in certain areas all over the United States that are not mortgage backed iBuyers. They're cash buyers, and they've got, you know, pools of just money. So we have that access to us, whereas Zillow and Open Door, the three big ones is what we call them, they've stopped buying. They stopped their buying. They withdrew all their offers from everybody's properties that they had offers on in the last 2 weeks.
Wow.
Express Offers are still buying. We're still buying. So, you know, we're going to have sellers, unfortunately, that are going to get in a situation where they're going to have to get out of their mortgages. Unfortunately, we're going to see that just because of what's happening. This is a program that can help somebody like that out fast. They can close in 5, 7, 10 days. They go in, they do a quick walkthrough, and that's it. So just something for people to know is out there. We have that program, so you can reach out to me if you have questions about that.
One thing, if I can add on, that is a great program. And actually it kind of segues into what I also wanted to talk about and mention real quick, if you don't mind.
Sure.
Is the other thing that's going on a lot out there right now is they're saying things like people don't have to make their mortgage payments. There's going to be moratorium. There's going to be forbearances, things like that, which you got into the business in 2008. And, you know, there was a lot of that going on at that time.
Yeah.
So, you know, with everything that happened back in 2007 through 2010, lots of forbearances, lots of short sales, lots of foreclosures, things like that happened. And then, you know, time heals all wounds. So as time moved on, that's one of the reasons why our real estate market picked up, because people who had gotten foreclosed on, say, in 2007, now a number of years later, they were able to purchase a home again. So I really want to kind of stress that we don't, you know, on top of the virus, the health issue that's going on, we don't want to make more of an economic issue as well. So please tell, you know, everyone that you know, do not just on your own stop making your mortgage payment because you read something in a newspaper or online or something that said, you know, that there's going to be forbearances. That has to be something that gets approved through whoever is servicing your mortgage loan. So you have to call not your loan officer, you have to call whoever you make your mortgage payments to and talk to them about the arrangements. And there's going to have to be in writing arrangements made. So, you know, I just don't want people to kind of go out there, because you know what happens. And next thing you know, we're going to end up, you know, with foreclosures again. And people are going to say, oh, but that was during that time. There's ways to do things.
something that people don't realize is when they're deferring these loans and they're issuing these forbearances, that's not free money. You will be getting that back. And I remember back when we had the last hurricane, we actually did a 3-month deferment, I think, on our mortgage because we left and went to Tennessee, and it was all due. And that at the end of the 3 months, all that money was due back. So people really need to understand what they're signing and what they're getting into. This is not free money. It's not, they're taking it off your mortgage. No, that's
Right. And they're not adding it on to a lot of people think they added on to the 30 years at the very, very end of the mortgage. No.
No. Right.
Yeah, and you know what? We need to protect our industry as a whole. And
That's my point. Yes.
That's part of the reason that we're in the predicament we're in right now, because we have to look at the big picture. Ginnie Mae right now is not it's a little unstable, and Ginnie Mae funds all FHA MBA lending right now. And we used to go down to a 580 credit score. Then it was bumped to 640 minimum credit score. And sorry, looks like my thing just shut down. Did I lose you? Okay, sorry. But we're going to be at 660. It's coming. So, yeah. And the reason we're at those minimum guidelines is because look at the market. You got 20% unemployment, and you got, people being persuaded to not pay their mortgage payment. Well, these servicers still have to make those mortgage payments on your behalf, whether you pay them or not. So what do you think is going to stress the market? If I'm an investor, I don't want to give that loan. It's a supply and demand thing. So why do we want to give money to people with a 580 credit score when there's not a lot of money to give? Let's go to 660. So FHA and VA are tightening up just for that very reason. So please make your mortgage payment if you can afford to make it, and don't hurt our local economy. Let's look at the big picture here.
Right. Yeah,
there's no free money.
There is no free money. People really have to understand that and this, I'm not going to get into politics, but this $2 trillion bill that they just put out there, it's going to come from somewhere, people, about that. Is there anything else that we missed that we should touch on that people would need to know going into this next, 4 weeks of lockdown?
Patience, patience, patience. that's a biggie. Be patient and be kind. There's definitely a lot of extra hoops that we have to go through at the end. There's extra verifications. We used to do a 10-day verification 10 days before closing. Now we have to do it 10 days before closing as well as day of closing, which is why no morning closings. We try and schedule them for later to give us a chance to do those verifications. So there's extra steps, extra hoops. So please be patient. Don't do 30-day contracts anymore. Everything is taking a little bit longer. So, I would do a minimum of a 45-day contract just to be on the safe side, give it a little bit of cushion for everyone, give them time to do their jobs.
Right. Yeah.
And I would say too, if you're sitting at home right now watching us and you're thinking about getting out and buying a house and looking online and your credit scores in that 640 neighborhood, go online, figure out how to get that score up, because it's going to be vital going forward that you have not a perfect credit score, but a good score. The days of 580, lower credit scores, 600, 620 are probably gone for the immediate time being.
And to piggyback on that, they're also out there saying, oh, go ahead and go run your credit card payments up because it's all going to be forgiven at the end. Do not do that, people.
No.
Don't listen to that.
Well, do that if you don't ever want to own a home.
If you don't want to buy a house, then fine.
Yeah,
do it.
Right.
Go for it. It's a great idea. I love it.
Right. Perfect idea. All right, you guys. Well, that was awesome. We'll probably do this again as we move through this craziness in our lives, but I really appreciate the time that you've spent explaining some of this because, again, I had these questions, and so if I have them, I'm sure other people have them too. So again, it's Delynn Gaston and Barry Horvath with the mortgage firm out of Trinity. Please give them a call. Do you guys want to give them your information so they can call or email you?
Sure. They can call the office here at 727-934-9348. And our website is closemyloantrinity.com. That's closemyloantrinity.com. And reach out to us anytime. I'm Barry.Horvath at tmf.mortgage, and Delynn is Delynn.Gaston at tmf.mortgage as well.
And I'm Amanda Alexander with eXp Realty. You can reach me at sellyourhomewithamanda@gmail.com, or you can call or text me at 727-871-0515. All right, you guys, thank you so much.
Thank you, Amanda. Thanks for what
Amanda.
you do.
Okay,
Take care.
bye-bye.
Bye-bye.